It is very likely, according to the technical and structural data, that the correction is not quite yet over for Bitcoin. Is a further correction coming? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. A little bit of an earlier upload today, but I'm trying a new thing on the channel. We'll see how it goes. I hope it can help out the UK and the US viewers jump into and tune into our videos a little bit sooner. In today's video, we're going to be talking about the current price action from a short-term and macro perspective, as it does appear the technical and structural levels are indicating the correction is not quite over yet. There could be some more downside price action, and that is what we're here today. And hopefully by the end of today's video, you should have a very clear and concise understanding of about exactly what to expect and exactly what the charts are currently telling us. We're going to be taking a look at the weekly and daily charts, going over our EMA bands, our Gaussian channels, our momentum indicators, the short-term price action compression ranges for the next move, and so much more. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you like, join us on Telegram. It is the second link down below. Sorry, the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and with the relevant data. If you are interested in joining our VIP channel, you can join our VIP group. We post trading signals with exact entries, guys. No one does this. Exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive analysis. Alongside that, you'll get access to our group chats, our general chat, our trading chart and education chat. We teach you guys how to trade. You guys are trading here on a daily. Our trade setup chat where you can post your own trades, daily videos, news, and help chat. If you're interested in joining over 600 members on by far the best VIP group on Telegram with over a 79% win rate, go ahead and contact me right over here. Let's get into a video, guys, starting on the market data. And as you know, the weekend comes around and volume essentially dissipates, right? The weekend is notoriously horrible for crypto trading because the volume is just so small. We're looking at a 59% reduction in 24-hour volume there, down to 23 million. We're looking at the 24-hour liquidations down 78% at 11 million. Volume is out the door. It is very unvolatile right now. And we can see that via the price action. We take a look at the real price action right now. We can see we have been compressing now for the last 24 hours in such a small range. If we're taking a look at this range over here, we've been compressing in a 0.3% range for the last 24 hours. But as you know, with compression, we get volatility at the end. So we will be expecting a volatile move to be coming very soon, and quite a big move to be coming soon that should officially break us out of this compression range we've been in for the last now 7 to 8 days. Moving on to liquidation data, taking a look at liquidation data, 5 million and 6 million in longs and shorts liquidated. Again, very split down the middle, very even for both sides, very indicative of compression, chop, and sideways price action. Looking at our volatility index, we can see the 30-day period is still plateauing a little bit, but again, very low overall. And the 60-day period volatility index is, guys, it's pushing to lows, right? We're at, what are we sitting at? 1.44. This is the lowest the 60-day volatility period index has been since we're looking all the way back to 2016. Cryptocurrency as a whole right now is very low in terms of volume and volatility, and it is continuously falling. As we've always said, these metrics of price action are very important at predicting reversals and continuations. When we do see volume and volatility drop, it is a sign of weakness, it is a sign of exhaustion, And with weakness and exhaustion, when we see it flip, it generally results in reversals. So we're looking for volatility on the high time frame to start flipping upwards to signify macro reversals or potential swings upwards for Bitcoin. Moving into the DXY is currently closing its week at resistance. Again, we do need to break above here for the bears to take control and push the prices lower. If the DXY rejects from here, that could provide some short-term relief for cryptocurrency, and it will be something we are looking out for in the coming week. Looking at the S&P 500 in quite a delicate position here, challenging that midline of the rising channel formation after a retest and rejection. We do expect a continuation lower here for the S&P, but again, it will depend on what the DXY does do on market open. Looking at the Dow Jones, if it does load, it is in a very similar position, retesting the uptrending support level of the last 10 months. This is a 10 to 11 month long uptrending support. If lost, will result in a continuation downwards to retest these lows right over here, guys. It is not looking ideal for the markets. We're in a very delicate position right over here for the stock market and of course for cryptocurrency. Let's go ahead, guys, and take a look at Bitcoin. So there is a lot to talk about today. We're going to be going over absolutely everything. I think the best way to start is to give you an overview. Right now, Bitcoin is in a weekly downtrend. The weekly downtrend is looking relatively bearish, right? Of course, we're in a weekly downtrend. The weekly downtrend is putting us at threat of developing a macro downtrend. This macro downtrend could potentially push Bitcoin not to new lows, but to $22,000 to $20,000. From a technical perspective, on the daily, on the weekly, on the monthly, we are starting to see signs of weakness. On the short term, we are starting to see signs of bearish compression. We're going to be talking about in today's video exactly from all time frames, what you need to be looking for and what the charts are really suggesting. So let's start on the higher time frames and break it down to the small time frame and immediate moves. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. If we take a look at this chart is going to be reflecting the overall structural ranges we are going to be paying attention to over the next couple weeks. The green levels are of course supports, the red levels are of course resistances. If we take a look and draw our biases over here, a break of 32,000 will result in a monthly bullish trend. Perfect. A break below 28,000, which we did accomplish, is putting us into a weekly bearish trend. A loss of 24.4 puts us into a monthly bearish trend. And finally, a reclaim or breakback over this level's 28K level puts us into a weekly uptrend. For the trend to flip fully, we do need to break above this uptrending resistance level. So right now, we are in a weekly bearish trend. If we're taking a look at price action from a structural perspective, we do have a potential head and shoulder pattern developing. We've been saying this for quite some time, well before we even broke toward the downside, that we do have a developing head and shoulder pattern. A lot of people are saying, okay, this head is high, this shoulder is higher than head, therefore it is not a head and shoulder. That is not how tilted or slanted head and shoulders work. Head and shoulders are validated by the ratio between the neckline and the high point of the head versus the neckline to the high point of the shoulder. Provided the distance between these points are greater than the distances between the neckline and the shoulder highs, you have a valid head and shoulder pattern. In this instance, this distance here is greater than our shoulder distances, and therefore this is a valid head and shoulder pattern. If we take the measured move of the head and shoulder pattern from the peak to the neckline and apply that as a vertical line from the breakdown point, we can see the targeted range is actually just under $20,000. So from a measured move perspective, from a structural perspective, the charts are looking very grim. If we go ahead and invert the chart, you'll see we've had a breakout, right? This is a classic breakout of a downtrend resistance. We are currently retesting this level of resistance here. And as we expect at resistance, resistance is resistance until it is not. Support is support until it's not. We have to be taking a look at the short-term metrics, specifically momentum, volatility, volume, buyers and sellers, to determine what happens at this level, whether or not we get a bounce, whether or not we get a continuation downwards. We'll discuss that in a second. So from a daily perspective, we are looking relatively bad. If we're taking a look at momentum, we did have that momentum uptrending level over here. We lost that level of support. If we take a vertical line, apply it to the breakdown point, we can actually see we lost that momentum level just before, one day before we broke toward the downside. If you've been following the channel, we said the entire time, if we lose this uptrending support level in RSI, that will be an indication of a correction that will follow, and we did see that. Let's move over to the higher time frame charts. If we take a look at the daily chart, we have actually seen a loss of the 50 EMA. If we go back in time, we can see every single time we drop below the 50 EMA, we end up seeing a pretty solid correction, right? We saw a correction of 20% here, we saw a correction of 30% here, we saw a correction of 24% here, and we can go back in history. Of course, the COVID crash, we can kind of exclude, but we still saw a 50% correction. We dropped below the 50, we saw a 12% correction. We dropped below the 50, we saw a 29% correction. And again, we have finally dropped below the 50 EMA once more, which has resulted in a 6% correction. By far and large, the smallest correction we have seen since dropping below the 50. This represents a shift in the weekly strength. Remember, the 50 EMA and moving averages are not support levels. They are not indicative of supports. They are representing two things. Number one, volatility, and volatility is derived from the distance between the moving average to the price action, meaning we have increasing volatility here, okay? Then we have compression between the 50 EMA and the price action. We have decreasing volatility in this range, representing compression and a potential reversal. If we take a look at the price action over here, we can see exactly the same thing. We have increasing volatility, decreasing volatility, increasing volatility, decreasing volatility. What does that represent? It represents exhaustion, it represents compression at resistance, and therefore we saw a break toward the downside. Therefore, this 50 EMA level is representing a trigger point of which the strength of the trend has flipped, or we see relative weakness in comparison to the price where it is above the 50. Therefore, we can say in this area of price action, we have relative weakness in comparison to what technical strength we had while we remained above the 50 since January. And therefore, from a technical and a structural perspective, since we are again underneath that uptrending level, we are in a weekly downtrend, right? We are in a downtrend. This is validated from a technical and now from a structural level. The 50 EMA can act as area of support and resistance, although it is not a support and resistance, meaning we can see retests of these levels as we have seen before, okay, once over here, as we have even seen back over here, and therefore, if we do bounce toward the upside, this could be a potential bounce target, a potential level of which we could see a retracement back up to before a rejection back downwards. So we are looking out for that. That is just one indicator, guys, that is showing weakness and is suggesting a downtrend is likely to continue. If we move to the weekly chart and get rid of this indicator and bring up our momentum indicators such as the RSI, we'll take a look and we'll show you one other thing. If we look at the RSI, specifically focusing on a particular point, which is the 62.09 point on the RSI. I actually think we have it over here. No, we do not. There's 62.9 point on the RSI. We'll go ahead and pop that in. 62.09 point on the RSI. We can see every single time we lose this level, we end up seeing a pretty aggressive correction. We saw an instance over here, an aggressive correction. We saw an instance over here, an aggressive correction. We even saw an instance over here with an aggressive correction. Once more over here, an aggressive correction. We can go back in history every single time we see a breakdown of this level from the top side down, we end up seeing quite a violent correction in Bitcoin. We have actually seen this again. We saw this a few weeks ago, and therefore this correction is expected to continue downwards. When do we generally see momentum come back positive on the weekly chart? We do generally see momentum come back positive once more when we break back above that exact level. So going back to the charts, breaking above the 62 level, we see a small uptrend. Okay, breaking above the 62 level, we see a small uptrend. Once again, breaking above the 62 level, we see an uptrend develop. We can go back in time over here, guys. Breaking above the 60, we see an uptrend. And one more time, breaking above the 60, we see an uptrend. So the 62.09 point is not here to impact or to determine bottoms or tops, but it can determine continuations in terms of momentum continuations on a higher time frame. So we do see that level reclaimed at some point. That could be a strong indication that the momentum on the weekly chart has flipped back positive and could result in a continuation upwards. Let's go ahead and take a look at one more indicator, which is going to be our Gaussian channel. The Gaussian channel, guys, is a phenomenal indicator at predicting macro directional shifts or macro continuations in price. If we take a look at the Gaussian channel, every single time we break through the top side of the Gaussian channel, we generally move toward the downside, finding some degree of support at that midline. We can see one more time over here, breaking down, we end up going toward the downside. Again, COVID-19 crash, it could be taken with a grain of salt. Breaking back under, we push back below. Okay, moving on. Breaking back under, we push back below. And this is just on the weekly chart. If we go to the daily chart, you'll see exactly the same thing. In this instance, we have broken toward the top side of the Gaussian channel and we've officially broken back underneath it, meaning we have had a shift from a uptrend into a downtrend. We've actually lost the uptrend which have developed. This is a sign of macro weakness. A loss of the midline will result in a continuation underneath the Gaussian channel, pushing Bitcoin towards that $19,000 or $20,000 target, according to the measured move of the head and shoulder pattern, okay? However, we do have support, and that support line is going to be that weekly support. Remember, 24.4K is the trigger point between a weekly downtrend and a monthly downtrend, and therefore it is a massive, massive, massive area of support on the chart. If we lose 24.4, that will validate the continuation downwards. I'll say it one more time. If we lose 24.4, that will validate the continuation downwards for Bitcoin. If we take a look at that weekly and monthly chart again, we can see that the 24.4 level is represented by the midline of the Gaussian channel, and therefore the midline of the Gaussian channel is going to be a trigger point for a continuation lower. If lost, we will push lower. Until then, we do have support on which Bitcoin could bounce up from. Let's go ahead and finish up on the smaller time frame. What are we seeing over here? So, smaller time frame, guys, we have had a week of compression, 1 week of consolidation for Bitcoin. If we are taking a look at the next move for Bitcoin, we need to take a look at the metrics of price action, as the price action itself is very, very deceptive right now. We are pushing sideways, we are compressing. There's basically no volume, there's basically no volatility, there's a lot of indecision after a large move, which is completely normal. We have seen two things: deviation to the downside, and we even saw deviation toward the top side. If we take a look at the chart from a structural perspective, we can take a look at our ranges and of course our volume ranges. If we take a look at the horizontal ranges, we have support. Support is spanning from 25.8 up to 25.9, and we have resistance, which is around 26.3. A break above this resistance is of course a bullish trigger, which should result in a continuation upward, and a break below the support is a bearish trigger, which should result in a continuation downward. If we continue down, where do we go? 25.2 to 24.4, the next major support. If we continue upwards, where do we go? Well, by no surprise, like we said already, the 50 EMA on that higher time frame could act as a resistance level. Where is that sitting? In this red box. So the target for the upward continuation will be 27.6, provided $27,000 is able to be cleared, right? We do have a bit of resistance within this range over here. So first resistance in this range, second resistance, major resistance in this range over here. Perfect. So how can we validate these moves, and how can we use a VRPV to indicate these moves? If we take a look at the VRPV, we are currently consolidating around the POC level, which is a developing POC, which is perfectly normal as the price is moving sideways. If we take a look above this level, we have decreasing volume and resistance until we reach that level of resistance. If we look toward the downside, we have a huge gap below 25.8. This goes ahead and validates the levels we have on the chart. It confirms that 25.8 is a bearish trigger, and it confirms that 23.6, okay, 26.3, sorry, is a bullish trigger. A loss of these levels will result in massively increased volatility, which is going to result in a huge move in price action. If we're taking a look at our technical indicators, we can see open interest is falling. If we have falling open interest and we have sideways price action, from a technical perspective, this actually represents a neutral consolidation, meaning the probabilities of a break up and a breakdown are relatively even. It's relatively 50-50. If we're taking a look at the RSI, we can see a uptrend in momentum as sideways price action is developing. If we look at the RSI, we have to be looking for momentum shifts. Therefore, if we see a negative momentum shift, we are likely to see the price break toward the downside. Until then, since momentum is positive, we have to treat support as support and therefore look for potential bounces toward the upside on the small time frame, provided support is held. Very important, okay? And finally, guys, moving on to the open interest, we can see we have a bullish trigger over here for your open interest, meaning if the price moves upwards but the volume does not move past this level, we have to assume deviation, meaning if the price moves upwards and breaks upwards and we get the open interest over, that should be enough to validate a continuation back into this level of resistance as we just saw before. Okay, guys, I'm going to summarize it there. I hope you enjoyed today's video. If you've got any questions, leave them down below. Make sure to subscribe to our channels. We also have a new YouTube channel, link down below. It is going to be for altcoins. If you're interested in altcoin analysis, go ahead and check it out. Thanks for watching, and I'll catch you guys in the next one. Oh, before I go, let me know about the time upload. Is this a better time for everyone, the 11 a.m. upload? If it's a worse time, let me know. If you want me to go back to my usual time, let me know. Thanks for tuning in. See you guys tomorrow. Cheers.